All right, what's going on, everybody? Welcome back to another webinar. There's a lot of new faces here that I could see. So if you are a new student in DTI, welcome. I hope you guys will have the best experience with the community and the webinars. Just to give you guys a quick, brief intro on DTI, because there's a lot of new people in here, obviously. The Day Trading Institution is my full online course, right? Which you have the core course content, and then you have the webinars and the breakdowns, which is kind of seen as like the continuous course content, right? So typically in terms of like webinars and webinar schedule, when I have not much going on in my life, we typically do webinars every Sunday, Tuesday, Wednesday, and Thursday, anywhere between 8 p.m. Eastern to 9:30 p.m. Eastern is typically the webinar schedule. That's kind of like what I always aim for, at least 4 webinars a week. Every single webinar is almost recorded and posted onto the course. So even if you don't make the live webinar, you can always see it. I mean, those of you guys that are already been going through the course and everything else, you just scroll to the bottom to the webinar section and you can literally see webinars from 2021, I believe. So there's a ton of value in those webinars and I highly recommend, especially if you guys are newer, right? You go through each and watch each and every webinar, even if it's only watching an extra 2 or 3 webinars a week. It's only going to take you an hour and a half of your day, right? And you will learn a lot from those webinars. Obviously, take advantage as much as you possibly can, because at some point, I'm going to retire from doing all these webinars, and you guys will have a course library of just 1,000 webinars alone. So take advantage as much as you possibly can of the webinars and having this kind of like, I don't want to say one-on-one experience with me being here, but again, you can ask a lot more questions in depth versus over chat. Other than that, guys, I mean, you guys have an amazing community of people already on the Discord that you can interact with and help each other out every single day. And then you can also personally private message me on my own Discord as well. Now, with that being said, getting straight into the webinar, the way I like to kind of break down these webinars is we'll go over my watch list. So pretty much I'm going to be going over what we could potentially expect in terms of moves out of the market and determining direction, pretty much on GBP USD, gold, the NAS, US 30. I don't really trade the S&P 500 all too much. I just kind of like pay attention to its movements here and there, but I'll go over the S&P 500. Now, quick warning, I don't personally place too many positions on gold or GJ. I mainly like to just trade when I do trade the NASDAQ and US 30. And then we do a small Q&A. Now, today's webinar is going to be a little bit shorter than normal. I'm probably going to try and cap the webinar at 30 minutes because I have a family member in the emergency room that I need to go check up on, which is why I was a little bit late, but I still wanted to come on and give you guys the webinar, obviously. Now, looking at GJ on the weekly time frame, because it is a brand new week. Again, every time we come into a new week or even just practicing top-down analysis overall, it's super important that we always see where we are on the weekly time frame. And then we slowly work our way down to our entry time frames. We need to be able to see what's going on all time frames. Realistically, the 4-hour, the daily, and the weekly time frame are going to be our more concrete time frames in terms of direction and understanding where price action may potentially go long term. Now, if we pay attention to GJ on this weekly time frame, essentially what we have is an area of resistance all throughout this 168 range, where literally over the last few months, price has been rejecting this entire area. Now, essentially at first, price did break above this 168 range and did close above this 168 range, but then sellers brought price all the way back under 168. So that's already one detail to keep in mind. Price is now trading back under 168, where we can potentially see sellers come back in the market and push this price action lower. Now, obviously, anything above 168, I would be very, very cautious with continuing to sell or short this specific pair because we're now trading back above 168. Now, I don't want to say last week was like a super strong bearish week. Although it was bearish, price did fail to actually close under the lowest low of the previous trading week, which is going to be this bullish candlestick here. Notice how price also failed to close under the open. So that's not giving me a very strong sell incentive. The only sell incentive that I have as of right now, basing GJ on this weekly time frame so far, is that price closed back under resistance, right? Remember, we're going to have our touch, we're going to have our gaps, and we're going to have our overlaps at these supply and demand levels, right? One thing that you have to keep in mind is that when price is rejecting an area, it's not always going to look perfect, such as this. or such as this. Sometimes a rejection could look like this, right? And you could potentially get caught in a fake out such as this one, like, oh, because if we were to put things in a perspective of 2 weeks ago, right, that looks like clear as day buys. But now this looks pretty simple to look to sell this specific market. These are all details that you want to be writing off on the weekly time frame. And again, those of you guys that are using a journal, and I highly recommend that you guys use a journal because you need to be planning your trades every single day and going over your own performance. I'm not trying to plug in TradeKeep, by the way, just trying to give you guys the, I guess, enthusiasm to start journaling, because at the end of the day, trading is a business, right? Just like you start any business, an e-commerce business, you need the proper tools to be able to have that business actually excel, right? So you got to treat this as professional as you possibly can. And that also comes down to not trading on your phone. If you could trade on your desktop or a laptop every single day, I highly recommend you go trade on a desktop or a laptop every single day, because no big trader, no hedge fund, right, is going to be on a beach sipping a margarita trading off of their phone. That's not how trading works, right? We're in the financial markets. We're here to make money. We're not here to make a few $100. We're here to make big money. So if you guys want to have 100K days, then you need to treat trading as your $100,000 a day business, invest in the right tools, and really have your own office set up dedicated for just trading. I know everybody's a little bit different, right? Maybe not everybody can show up on the computer every day. I know everyone has normal day jobs or whatever the case might be, but you need to try and get to that point and keep trading as professional as possible. Anyways, back into the breakdown, going down to the daily time frame. Essentially what we have here, I don't want to say it's a complete shift in structure, but overall we're starting to see price action trade lower and lower. So the way we view market structure is we have higher high, higher low, higher high, higher low. This is referred to as a higher high because it is higher than the previous high. And this is referred to as a higher low because it is lower or higher than the previous low. This is going to be a clear as day sign of a bullish condition, a bullish trend, right? And essentially what we have here is a high and a low. So as of right now, price action is trading lower, and it did reject this area of support here on the daily time frame, which is something to keep in mind. Now, with price action rejecting this area of support on the daily time frame, I would like to see price action pull back into this area of resistance. Again, we're only looking to sell at areas of resistance with the trend, and we're only looking to buy at areas of support with the trend. We do this because these support and resistance levels give us areas where we could safely secure a stop loss, and we have an area that will protect our stop loss order. One thing about supply and demand trading and why it makes the most sense to me is because there's going to be liquidity in these areas. So if you set your stop loss above a zone of liquidity or under a zone of liquidity, if price does come back down to grab liquidity, typically it'll do so without hitting your stop loss unless you're just like a major liquidity grab, right? And the banks just kind of want to take everybody's money. That's unavoidable. I mean, you could get back into the trade, but just to keep kind of things simple, that's why we actually set our stop losses above and under these zones. And that's something that's very crucial, right? It's not about just setting a stop loss. It's about setting a stop loss in the appropriate areas. That's what's going to determine our risk on a position. Now, with GJ, it doesn't take a mathematician to identify that support is roughly down here at 165,500. We have multiple rejections day after day, and each rejection from this zone is pretty significant. Also looking left, structure will always leave clues. We have a resistance level at this range. So this range could definitely give us a pretty good trade idea if that's how you kind of want to state it, but it'll give us a nice setup for us to potentially take in the future. And again, like one thing that I was talking about previously in the last webinar I did, I believe it was on Thursday, right? I don't want to say no, because we never know, right? But if price has a 90% probability of dropping from this area and a 70% probability from dropping from this area here being our two major zones, why take a trade in the middle where you only have a 50% chance of winning, right? It's pretty simple, right? The math has to be in your favor, and you want the math to be in your favor so you can play your edge out in the market. Even just by trading with the trend alone, you're already going to have an edge, but you want to exploit your edge, and you really want to exploit the inefficiencies in the market as much as you possibly can, right? So in a situation where GJ is kind of like trading in the middle range here, there's a few ways we can look at this, right? First area is we do have this resistance level right here as well. We have 166,938, let's call it. We have resistance throughout this entire range here. here, and now price is rejecting this resistance here as well. So this potentially could be an area that you can take a position from. If you go to the daily time frame, what we also have here is multiple daily closures around this price point. Again, you have to keep in mind supply and demand support and resistance. It's not a specific price, but an overall general zone. And then we kind of have the higher range of resistance being 168, let's call it 167, 900, 168, that general area. So now what I've done is I've pretty much split price into 3 different points that we could potentially take positions from. And ultimately, as of right now, I wouldn't take any position because we're in the Asian session, but we want to wait to see what price action looks like in the London session, right? Because if price action starts to trade above this zone right here, then we have a high probability of coming back up into this zone, and I don't know what's going to happen from this zone. We can reject this area and continue to go down, or we can break that area. Ultimately, if we're going to see price reject this area, we want to wait for simple rejection candles to give us that confirmation, which after that, you need to determine what the risk is versus what the potential reward is. One thing that you do have to remember in trading is that one thing that's always going to be predetermined is how much money you're looking to lose, right? That's one thing that can always be predetermined by simply identifying your risk and setting a stop loss. One thing that's unpredictable is how much you're going to make. You never know how much you're going to make. You can only try and predict how much you're going to make based off of your probabilities, based off of momentum, and based off of risk to reward. You can only anticipate that, hey, I'm looking to risk 1% on this position to try and gain 3% because my nearest target is giving me a 3 to 1 risk to reward ratio. Sometimes you'll hit that 3 to 1 risk to reward ratio. Sometimes price may just keep dropping and dropping and dropping if you're short, and your anticipated 3 to 1 is now a 10 to 1. Sometimes you might break even, right? So your reward is always unpredictable, but your risk can always be predetermined. So in a situation like where GJ is currently trading out right now, again, I want to see what price action looks like during the London session. If we start to see rejections of this area, then definitely you could potentially look to take a short from 166,938 back down into 165,500. That would be a pretty good area to look to kind of take that position here. Obviously, you would like to set your stop loss above this 167 level. Pretty safe stop loss could be anywhere between this 167 100 area, simply because if you're looking to short around here, and I'm giving you guys kind of like a pretty hard estimate on where we could see price, right? I would like to personally see a retest of this level before looking to take the position, right? But you're looking for a possible 146 pip downside move. Anywhere between 76 to 140 pip move is what you're looking at. So you could safely set a stop loss at 27 pips, 26 pips, if you would like to give price enough room to fluctuate. Again, I would like to see what the rejection looks like if we do get a retest of this level, simply because if price comes all the way up to here and we have a closure right here in a big ass wick all the way to 167,500, then your stops aren't going to be under this area here. Your stops should be above the highest point price hit before rejecting. So things could change by then. Now, if price action continues to trade bullish, wait and see what price action does at this 168 range. If we get a rejection of this 168 range, I would look to take a short from 166 or 168 down to 167. If price breaks 167, I would look to take price down into 165,500. Now, if you just so happen to miss all of those trades, the best thing to do is to wait for price to break under this area of support. If that's what price actually does and price does continue to go short, wait for a pullback back into this range, because what previously was held as selling pressure or buying pressure can now be held as selling pressure. And again, the tables could simply easily turn in an area like this. You wait for the rejection, and then you can then look for another move to the downside, where if price were to break that area, I would probably look for like 163. Now, if price breaks above 168 and starts getting to the 168,500 range, I would be pretty cautious on shorts, and at that point in time, I would probably start looking to buy, because now we're trading back above the previous day's open candlestick, or not the previous days, 2 days ago's open candlestick, right? And I would be very cautious to continue to sell after that, because now on the daily time frame, we're going to be forming a bullish variation pattern, which is a big indication, especially on the daily, that price can continue to go higher, and we can possibly see price go up to 172, 150. Now with gold, so gold actually ended up rejecting this area of support yet again on the weekly time frame. Notice that every single week, it was literally week after week after week after week after week Price rejected this 1644 area of support, which you guys got to keep one thing in mind. They should tell you that not even 1 week sellers were able to close under this zone. It was literally rejection after rejection after rejection. Although the level is 1644, sellers brought price all the way down to 1610. That's a pretty big move. And sellers still failed to close under that range. So that should give you a big indication about the buying pressure that there is in this area, right? This is all the details that we want to use here on this weekly time frame. Notice all the rejection to the downside too. But again, structure can look very different on many levels. We go down to the weekly time frame, and 1644 actually may look broken on the daily time frame, right? But we have the overall daily lows being at around 1620, which we did see price actually reject and continue to go up from there. And so far, prices made new highs. So with this previous daily candlestick, there's a lot of volume, which can indicate that we may see another push up. Now, we have to ask ourselves, well, price is now trading back above the 21 SMA. We have a huge, just an absolute behemoth of a bullish engulfing candlestick. And there's a lot of volume within the previous trading day's candlestick. Notice how there's very little wick to the downside and there's very little wick to the upside. This is an indication that buying pressure on this specific trading date was very strong, and overall bulls just took over that trading date, right? Now, if we look at the 4-hour time frame, again, going back to our basic market structure principles, we have a low, we have a lower low, we have a lower high point, then we have a lower low point here. Price is now broken above our previous lower high point and the result of a higher high. This is what we call a break of structure and a change in structure. Typically, we're going to see this, and this is the first leg that we can use to identify a potential change in trend. Typically, when we see a potential change in trend, we see price going from making lower lows to lower highs to making a higher high, which is going to be your leg one. Your second leg will be a pullback for you to look to take advantage of. This is where you would want to look to get in somewhere to then catch the third leg. And then this is a confirmed change in trend. This is called a 3-leg extension, right? That's when you could start looking from going from selling to buying, vice versa, from buying to selling, right? Very kind of simple, basic concepts. Again, trading is not something where all the concepts are super complex. It's just a lot of simple concepts put together in different situations. Now, one thing that we have to ask ourselves is, well, okay, if we're starting to look for buys, how can we possibly take advantage of this opportunity? Again, it's the same thing. Just like in the real estate market, what a house price costs a year ago, the same house price has increased in price by 40%. May not be the smartest thing to buy in an inflated market. We want to wait for a discount. Same exact thing when it comes into trading, right? Instead of buying, and I'm going to give you guys this hypothetical, instead of buying gold right now for $1,600, call it $1,700 an ounce, we can wait for gold to pull back into 1660 to give us that discount, so then we can make money on the move back up. And on top of that, when we wait for these pullbacks or discounts, we're decreasing our risk while maximizing our reward at the same exact time. Now, we look at where gold could potentially pull back to, because again, we only want to buy at a higher low point. We don't want to buy at a higher high. It makes no sense. We have to look at the previous supply and demand levels, the previous support and resistance zones where we could potentially see gold pull back to. And to me, we can look at this overall median of 1660, where we can wait for that pullback and wait for gold to get back into this range, where if gold does come back into 1660, only thing you have to do is wait for that rejection and then wait for your buy signal. Everybody's buy signal is going to look very differently. Me personally, I'm more of an aggressive trader. So once I see that rejection on the 4-hour time frame, I'll automatically hop down into the lower time frames, especially on gold, such as a 30-minute, maybe even a 15-minute time frame, just to wait for a simple rejection candlestick again, maybe double bottom or retest, and then look for price to go up into 1677-ish, right? So I believe that is about an 200-ish pip move that we could potentially be looking at from, let's call it 1660 to 1657. And then you could safely put your stop loss under this 1655 area right here. Pretty much this entire range, you just have to set your stop loss under the lowest point. You could look to take a trade from this point to this point up here. That is the clearest setup that I see as of right now. I personally would wait to buy gold if price does break under 1660. I would like to see what it does again at 1644. you have to remember, I mean, if price pulls all the way back to 1644, you're talking about more than, I mean, if we measure it from this point to this point, you're talking about more than a 61.8% retracement, which is going to signify to us that maybe buying pressure isn't as strong as we may thought, because buyers literally allowed themselves to start losing this tug of war and allow sellers to bring price lower than 61.8%, right? And even if we measure it from the lowest point of this move to the highest point of this move, it's kind of roughly in the same range. We're still under that 50%, which once we start getting under 50%, I'm a little bit more cautious on looking to take a trade on the side that's losing, right? Typically for a pullback for me, I'm very comfortable with like 50% pullbacks. That's something that's pretty normal that we could see, and that's healthy in the market. But above that, it's kind of like the other side is starting to lose here, right? That's what I would wait for on gold. If you end up missing out on this move here and it does continue to go up, then realistically, the only thing that I would tell you at that point in time, wait for a break of 1680, wait for price to make new highs, and then wait for price to pull back down, give you that retest where you could then look to buy. Again, we have to establish that this previous resistance level does hold as support. Once we have that established, that gives us another buying opportunity to buy back up into the next high, or if you want to look for a bigger move up, a bigger extension. Anything above 1680, we could easily see gold come up into this, call it this 1691 range, which would be the next area I would be paying attention to on gold. Now, US 30, right? If we look at US 30 on the weekly time frame, there's a lot of talk about interest rates and how interest rates could continue to go up, which is why we saw a huge move when that report did come out, big ass move to the downside as well, right? So going just solely based off of a technical analysis and a price action structure, honestly, this isn't something that would be too excited for me to continue to look to sell this price action. The NASDAQ looks a lot better to continue to sell the price action based off of the weekly time frame. I mean, this isn't a very strong rejection candlestick, but one thing that I will say for sure, if we look at the past of US 30 and this current bearish trend, is that essentially, we have a move down, right? A huge pullback, another move down, a huge pullback, another move down, huge pullback, etc., etc. Huge move down, and then a huge pullback, right? So we're starting to see kind of like this market structure give us really big retracements. And that's something that I kind of expected with this specific market. Now, if we go down to the daily time frame, things may actually look a little bit better to short on the daily versus on the weekly. The thing to me is how this current market structure is actually playing out. Although, yes, there is a bullish engulfing here on the daily time frame and price is trading above the 21 SMA, I personally would not look to buy US 30 unless it can get above this zone here. Again, you have to ask yourself, there has to be a reason as to why price gave us a pullback from 31,000 all the way up into the 32,400 range. And then in the span of a single day, I mean, it was also CPI that helped it. But in the span of a single day, we saw a move from 32,400 to almost 31,000. I believe this day alone was a 3, 4, 5% drop, just fucking massive, right? So you guys have to ask yourselves these questions. And it's kind of like, okay, well, if there was that much selling pressure and there was that much interest in selling around this range, what are the possibilities? What's the probability that could happen again in the future? And as of right now, the daily candlestick pulled all the way back and pumped up into this entire zone here, which you guys got to keep in mind. It's not a specific price point. It's an overall general zone, which I would say the entire zone is going to be roughly around this range right here. And so far, the previous daily candlestick has actually rejected this area, right? So as long as price can kind of maintain under this area, honestly, I would continue to look to short this market, right? Now, once price starts to break above this area, then realistically, the only other area that you really have to look out for would be this zone right here, this 32,940 zone, maybe even 33,000 flat, let's call it. That's the only area I would look out for if you're looking to actually buy, because obviously I don't want to say the previous 2 trading days, but we had multiple trading days that price just simply failed to break above this area. Now, it's kind of obvious if price does break back above this zone, again, it has a very high probability of coming back into this range, and then we have to wait and see what happens from there. If we have a daily rejection, then that's a pretty good sign of a double top pattern, and we could see price turnover. If price breaks above this area here, then it's very simple. Same thing I always tell you guys. Wait for the pullback, wait for the retest, wait and see if this area of previous resistance holds as support to give us the best trading opportunity possible for us to look to buy it back up into the next range, which would roughly be, let's call it this area right here, 32,300, let's call it, right? So until then, let's kind of wait and see what happens. Overall, this market structure is still pretty bearish. I mean, we have the area that we're looking at this in being in this entire range. So this is kind of the sell zone that I would look at as of right now. Structure is still pretty bearish. Here as well, we have lower lows and lower highs being maintained, this being our current lower high point. So if price breaks above that point, I honestly wouldn't be too interested in shorting the market anymore. But again, guys, like so many things can happen by the time the New York session market opens, which honestly, if you guys are trading indices, you should only be trading it during the New York sessions. For all my new people that are here, I tell DTI students all the time, you only want to trade during the New York session, US 30, the NASDAQ, and the S&P 500, that is, right? Now, in terms of targets, if we do see a rejection of this area, we can easily see it come back down to this previous 4-hour support being 31,800. Again, you just have to ask yourself, where does price have the highest probability of traveling to next? And I like to make those decisions based off of my 4-hour time frame for my longer term projections, right? Obviously, you could catch scalps and intraday moves in between these areas. I'll take trades where, let's say we have a short opportunity from here. I'll take a position from here to here and call it a day. I'm personally someone that trades with a pretty heavy position size, so I don't need a massive move out of the market to be satisfied. I can make a good amount of money just catching a short 5-minute time frame move from this point to this point, right? That's going to pretty much summarize US 30 and where I could possibly see, where I see US 30 possibly going in the next few trading days. Now to end it off with the NASDAQ. So the NASDAQ obviously has came back down into its previous low. Sorry, I thought this was the weekly. So on the weekly time frame, we're still very bearish. I mean, it's not that big of a surprise. We have a previous low here, previous high here, current low here, and then we have a lower high point here. So obviously, if price breaks above this area on the weekly, I would not be interested in selling this market anymore. Obviously, I'd be interested in looking to buy this market here. Now, if we go back down to the daily time frame, essentially what we have is a counter trend where essentially price made a low, a lower high, a higher low, higher high, higher low, higher high, low, and then we just broke under those lows and made lower lows. So now we have to wait for price to give us that pullback, give us that lower high, so then we can continue to take advantage of this bearish condition. Now on the 4-hour time frame, we have this area of resistance here where we do have major support over here as well. So this is definitely an area to be cautious of. I don't know if price is going to be trading around this range by the time the market opens up. I doubt it. So if price does break above this range, you can easily take a short at 10,000 or 11,000. That would be the next area I would possibly look to short this market. Pretty much kind of this zone right here would be the next area I would look to short this market. Now I'll short it back down into this zone right here, possibly even this zone. Now, by the time the New York session market opens up, if price is trading lower than this area of support, I would simply, again, wait for the retest, wait for the pullback, wait for the rejection, and then look to actually sell this market, right? Kind of like the same thing that happened over here. Price broke under the zone, pulled back up into the area of previous support, which now held as resistance, giving you an opportunity to short from this point to this point. And that would have been your trading day. You could have been done. You could have made few hundred to a few $1,000s. Then you could have gone to the beach, bartender, let me get some margaritas, mojitos, whatever you're into. You know what I mean? That's what we call a pretty good trading day, when a trade goes literally to plan like that. Obviously, with everything that's going on in the economy now, there's a lot of chop recently, so I would be very cautious. But again, guys, it really just comes down to simple probabilities, using the trend in your advantage and looking for your supply and demand zones where you could take your next possible position. Again, if the NASDAQ breaks above this 10,000, call it 10,860 zone, then I would look for the 11,000, 10,999 range to sell it back down into this zone here. Because you guys got to keep one thing in mind. Although the NASDAQ may reject this area, we don't know if it's going to come back down into the lows. And personally, I don't care if it comes back down into the lows or not. I'm here to make money, right? So if the NASDAQ does reject this 11,000 zone, the highest area for the NASDAQ to go back down to next would be a previous area of structure, would be our next area of support or resistance, our next area of supply or demand, right? Which would be this area here. At that point in time, the decision will be up to you if you want to hold the position or not. If the NASDAQ does break this area, then we can look for it to come back down to here. If it breaks that area, we can look for it to go down into the next zone. Now, I say, always aim for the nearest area, your nearest area of supply and demand, because there's been a lot of times where I'm caught in a trade where my target is down here. The NASDAQ will hit my first area right here, completely go up and go against my favor, and I end up breaking even for the day instead of making a huge profit, right? So again, I'm just here to share my experience with you guys, but that's basically going to conclude with the breakdown, a little bit longer than I expected it to be. If does anybody have any questions? I'm not going to answer questions for too long. Like I said, guys, I do have to go to the ER, so just try and take advantage for, let's call it, the next 7, 8, 9, 10 minutes.
Hey, Raul, I have a question.
Yeah.
I wanted to know, are you trading in the indices on the London session, or are you doing it on the New York session?
No, so each asset is going to have different times where volume is going to come in the market. Remember, volume and momentum put together is what's going to give you trading opportunity. You're not going to see much volume after hours on the NASDAQ or on the Dow Jones or even in the S&P 500. So even though there may be some moves, again, it just really comes down to just putting good money behind good risk, right? I want to say bad risk is trading outside of market hours, which market hours, the stock market opens up at 9:30 p.m. every single day. Some people like to have positions pre-market or pre-New York hours, pre-market open hours. That's up to you. As long as it's not too far away. Some people like to trade after the open because there's a ton of volatility that comes in after the open.
Oh yeah, Raul, I got a question real quick.
Yeah.
For GU, right? I was looking if I were to sell, right? I was personally waiting for price to go into 1.1.
You said GJ or GU?
GU. And I say if I wanted to sell, right? I was looking at price for the daily candlestick to reject the 1.14500 area before I would be comfortable taking sales because of it's making
500.
Yeah, 1.14, that whole area, 1.14, 500, 1.1400.
So last time I talked about, wow, it played out so fucking perfectly. Last time I talked about GU was price was literally trading under here, wait for the retest, and you can see what happened after there. As of right now, I would honestly wait for GU to come back up into this red zone. Maybe if you want to be really open about this entire zone, that would be kind of this area here. I would wait for a retest of there, to be honest with you, because I wouldn't be too comfortable trading when price is still in this kind of counter trend position. I would like to see a retest and a rejection again.
Yeah, but I had the same thing, but I was waiting for the daily rejection because price was making higher lows into resistance.
Yeah, if you want to wait for the daily rejection, that's cool for you.
Okay.
So I wouldn't anticipate getting the best switch to reward after waiting for the daily rejection, because the daily can come up to here, reject, and close down here, and you've missed out on all of this potential reward.
Okay.
But definitely wait for another retest, that's for sure.
Hey, Raul.
GJ, well, for GU, actually, a quick question on that. If you went on a different chart, it's actually rejected on the 4-hour already.
Wait, hold on. I was hearing a lady speaking. I'm always a ladies first type of guy.
All right, no problem. All good.
Yeah.
Thank you. Listen, question. How do you feel about the 2.36 retracement on the fib?
Honestly, I don't use fibs nowadays, but personally, I wouldn't even pay attention to it. It's just such an insignificant pullback. If it pulled back to a major level, go for it, I guess, if you're someone that uses fibs. To me, I'm always going to put my levels over any indicator, because the Fibonacci retracement tool at the end of the day is an indicator telling you where prices pulled back to. You can use, fib tools to make hypothesis on where price could pull back to. Nothing wrong with it. I wouldn't rely on it too much, to be honest with you. I wouldn't say, oh, fibs at 50%, we're going up from here. I wouldn't adopt that type of mindset.
All right, thank you.
Raul.
My bad. Was it David with the question on GJ?
GU, yeah, I had a question on GU. When I was asking about GU, because on your chart it looked like it didn't reject, but if you use Oando, it looks like it actually rejected already on the 4-hour.
I use Oando anyways.
Yeah. So I saw that.
Yeah, it kind of did. I would still wait for the retest, though, to be honest with you. My personal opinion.
Okay. All right.
Yeah,
No
it definitely did reject, but I would wait for the retest.
All right. Thanks,
Raul.
Yeah.
How do you go about entering on lower time frames like the M5 or the M15 for indices?
Honestly, it just really depends on the situation and the choppiness in the market. If the market's really choppy, I'll wait for a 15-minute to look to take positions from. But realistically, right, what I simply wait for is a rejection candlestick. Right, once I see price come into my zone and I start seeing price reject that area is when I'll take my position.
So can you like explain that trade there?
This trade here.
Yeah.
So if I were to have been trading this market at this point in time, right, the one thing that I would be doing is paying attention to price on the 30-minute time frame. Once I already see price reject, which it did reject right here on the 30-minute time frame, again, you have a touch gap overlap, right? This is by minor points here. I would immediately go down to a 15-minute time frame to see what that looks like. Since there was still strong volume here, I wouldn't really be looking to take a position right then and there because we could definitely see price continue to go up and either retest it or reject it and give us another retest. So to avoid potential drawdown, I would go down to the 5-minute and look at momentum. So the initial rejection is here, then price pumped up, and we had another retest and rejection. So right once this candlestick closed here, all of this are signs of rejections, and this was an ultimate sign of rejection along with the fake out, potentially trapping buyers. Right at this point in time, right? If I would have seen this 5-minute candlestick close, I mean, the simple setup is very easy, right? I short here, my drawing tool. I go short after this 5-minute rejection, stops above the 5-minute rejection, take profit being the new low or the current low, which would be my next area of support. And that would have been my potential trade setup. That's how I would have looked at it at least. Sometimes if I'm feeling a little bit more aggressive, right, once I see price actually reject and start trading back under, I may enter positions here, looking around the 1-minute time frame. If I'm really like that focused into the market and I really want to give myself that amount of stress and extra gray hairs, I'll go down to the 1-minute time frame. You can use a 1-minute time frame to your advantage in terms of momentum, but personally, I've been noticing, I mean, my fucking back and my sleep has been horrible because of stress. So I'm like, you know what? I'm gonna stay away from the 1-minute. And you just complicate things in the 1-minute a little bit too often, to be honest with you. So
Yo,
typically I
Raul.
try and maintain at the 5-minute.
And like,
Bro,
what if you see like two positions for in the indices? Like, let's say if I get an opportunity in NAS and US30 at the same time.
I'm more of a one trade type of guy. I've done the two positions, gold, GJ, gold, whatever. It's just so much more complicated. And there's also been times where like I've ruined positions on one pair by trading a different pair at the same exact time. Me personally, I'll look at both trades, see which one looks the cleanest, has the highest probability, and I'll enter just one position on one of the pairs that I see. I don't want to say pair, on specific index.
And what about your risk actually? Can you explain that as well?
Risk is ultimately up to you as an individual. You need to make that determination as a trader. You have to identify what type of risk tolerance you have. I personally have a very high risk tolerance. I've been trading for quite some time. I have pretty thick skin, I want to say. So I'll
No, but
typically
like
take
if you're entering from like a lower time frame, like a 5-minute time frame, and then you get entries on a 15 as well. So how are you
my
gonna manage your risk?
my risk stays the same. I mean, if I'm entering a higher time frame is actually when I lower my risk because I use I use a bigger stop loss.
Oh,
But
okay,
my
okay.
risk roughly stays the same. I don't really like to change my risk up all too much. If I'm risking 10,000 a trade, I'm going to be risking 10,000 a trade until I make 100 grand, then I'll increase my risk. Ultimately, like how I do my trading risks and identify risks in the market is very different than what you're going to do. The best advice that I could give you is identify what type of risks you're comfortable taking with the amount of equity you have in your trading account. And your goal is to build as much cash flow for your trading account in the beginning as possible. So then you could use your profits and pretty much leverage your positive equity that you have in your trading account to be a little bit more flexible with risk to ultimately make more money long term.
But what about for FTMO? Like this is
Bro,
you're talking about like
FTMO,
a live account, like
yeah, FTMO, you're stuck. You're risking 2%. That's already high risk. And then there's not much to say.
yeah. So you'd risk 1%?
Yeah, but I wouldn't. I mean, me personally, like
No, this for
when
indices now, like
indices, forex, stocks, even if you're trading corn, doesn't matter. 1% is pretty the number you want to trade on.
mm-hmm. All right.
Hey, Raul.
Thanks, bro.
Yeah, no
Oh,
problem, bro.
Bro,
hey,
Yeah, it was
Raul.
good.
can you check US 30?
Oh, I already did.
I don't know, but I want to go over something. On the weekly time
Okay.
frame,
Yeah.
you wouldn't consider around, what is this, like 33,500 or 3,400 support level?
Like this area here?
Yeah.
Yeah. I mean, the way I see it is like this is my current price action, right? I mean, I
Uh-huh.
can even drag this out to here and we have this, you know?
Okay. So
So
that would be considered level.
yeah, 100%. Now, if price breaks above this area, we could definitely look for this area next, you know?
Okay. Yeah. Thank you.
Hey,
Yeah,
Raul. I just have two
quick
questions.
question about journaling. When
Yeah.
you journal on the weekends, how do you manage, especially when you're looking at your losing trades or winning trades? Do you like have a system to follow? Like, okay, so I'm missing this trade, reading whatever, or do you, how do I explain it? Like, do you look at trades and see like, okay, I made my fault, like I didn't identify the setup, or do you have like
Yeah, you have to.
some what?
You have to. You got to look into your journal and look at, well, the first things first. Like, if I take a loss, I ask myself, why did I take this loss? Was this a planned loss? Was this a good loss? Or was this a bad loss that wasn't planned? An example of a bad loss that wasn't planned. If I told myself, I'm going to wait for US 30 to pull back and reject at 32,500, right? And I took a sell at 32,360, obviously it's a bad loss and it wasn't planned because I planned on shorting at this area up here, not this area here. There's been a lot of times that that's happened to me and I could have saved myself hundreds of thousands of dollars in losses by simply waiting for my setup, right?
Okay.
And what did I learn from that mistake? Simple FOMO. I didn't want to miss out on the move, right? It comes back down to basic emotion or over trading. If I see I took 3 trades, 4 or 5 trades in a day, I knew I was already over trading and I could have potentially kept my loss as small as I possibly can by only taking that 1 or 2 positions that I plan at most, but I took 5, you know?
Okay.
Rob, a question real quick.
Yeah.
Could you go to like the weekly time frame, right? Would you consider that a rejection?
Where?
That bearish candle, like that last week's.
Yeah, this is a rejection of resistance, and we have a rejection of support right here.
Okay. Because sometimes like I usually wait for like maybe a pin bar doji or like a bearish variation or bearish engulfing before like I consider it like a rejection. But sometimes it doesn't do, like most of the times it doesn't do that, and like sometimes it kind of get like confusing sometimes.
Well, the best thing I could tell you is we have previous support here, and we have resistance right here. Did price move away from resistance here?
Yeah.
So it did what?
It rejected.
Did it give you a sell entry? No. A sell signal typically is going to be that pin bar, doji, bearish variation. Those are sell signals, right? Those are really strong sell signals. But this is still a rejection. If I throw a ball at a wall and it comes back and smacks me in the face, did the ball reject off the wall?
Yeah.
Simple.
Question for you.
Hey, Raul, just a quick question.
Can
You
you go
see,
on Nas?
My bad. So one person at a time, please.
yeah, so just a quick question. You see on US 30, right? You said that if price continues to maintain below the red zone, you should look for sells.
I would look for sells, yes.
Yeah, so wouldn't you say right now we see a daily rejection, right? There's a wick into that zone. We can also see on the 4-hour there's a few wicks and rejections. So wouldn't that give you leeway to scale down into the 30 and 15-minute time frame?
Yeah, 100%.
Entries?
Yeah, 100%. But I, again, at this point in time, I would like to see another pullback into the zone. It's most likely going to happen anyways when market opens back up. So I would like to see another pullback and rejection of this zone. Realistically, tomorrow morning, if I decide to actually trade, this is the area where I'm going to be even considering taking sells. Once I see price action tap into the zone, okay, now let's go back down and see what that looks like. But then again, like, you know, the 4-hour could keep pumping and pumping and pumping and pumping. As long as it maintains under this general area is where I'll continue to look to sell. Anything above, I'm not even going to think about.
Just one more question, right? Just if you could go on gold, please, if that's okay.
Yeah.
So you see how you said you're going to wait for price to get to around 1660 and wait for a 4-hour rejection and then go down to the lower time frame.
Yeah.
So if you go on the 4-hour time frame, let's just say hypothetically you're looking for a sell now. Let's say it's at a key area of resistance and you're looking for a sell. But if you see on the 4-hour time frame, on the 4-hour, you can see there's a huge bearish engulfing, right? So really price has got away from your area before you even got to scale down into the 30 and 15-minute time frame, which can mitigate your risk to reward. So in these scenarios, would you not consider entering, or would you just wait for a bigger pullback? And if you don't get that bigger pullback, you won't consider entering.
Wait for a retest of this area before looking to enter again, before you consider taking the position, so you could then again increase your reward. Because I don't want to sell when price is already rejected. That's why me personally, when it comes down to my trading, I like to trade aggressively, because I like to try and get in as close to my level as possible, so I can then decrease my risk and minimize my risk while maximizing my reward at the same time. The con of trading so aggressively is I may get stopped out a little bit more frequently, but that's perfectly fine by me, because my average trade size, my average risk to reward ratio is like a 3.5 at this point. Right now it's 6. So even if I lose 3 trades in a row, 3 positions in a row, and I'm down 30 grand, I'll make that back in a single trade.
Yeah.
Some other people aren't like that though, but that's just how I personally like to trade.
On your pullback, right? When you say aggressively, sometimes I used to see on your YouTube videos and stuff, you didn't sometimes wait.
We made to KFC and we KFC.
My bad, I had to mute him.
Yeah, you didn't wait for like a 30-minute bearish engulfing. Sometimes you just see a wick rejection on the 30-minute time frame and take an entry.
Yep, that's my sell signal right there.
Yeah, okay, so it wouldn't have to be like a strong bearish engulfing with the time. It's more aggressive.
No. Because the thing I learned over time is when you wait for that extra confirmation, sure, it's extra confirmation. The trade now has a higher probability of going in your favor. But by doing so, you're leaving a lot of money on the table, right? And for me personally, I looked at the pros and the cons of it. For the confirmations, I'm going to win maybe a little bit more trades, but I'm going to make a little bit less money. For entering aggressively, I'm going to possibly lose more positions than I'm winning, but I'm making way more money. No, and I've done a shit ton of examples of trading this way just by simply doing basic risks to rewards on these positions. Like you could turn a 2-to-1 risk to reward ratio into a 7-to-1 risk to reward ratio, but just by entering a little bit more aggressively.
Yeah. Sorry, last question, because I know everyone else wants to ask questions.
My bad. And also that gives me a lot more freedom of closing my trade earlier. Because a lot of people are like, oh, when should I move my trade to stops to break even, this and that, and blah, blah, blah. Right? Like by entering more aggressively, by the time you're even up a 1-to-1 entering very conservatively, I'm already up 3 times my risk. At that point, I could close my trade, call it a day. Another pro of entering.
Just right in front of you as a perfect example, just with those triple bottomers right there, with those wicks are. Yeah.
Yeah, I mean,
one thing that stresses me out quite a lot. So let's just say you take an entry and you put your stop loss below the zone. Sometimes I struggle to know where to put my stop loss, because obviously, especially with gold and US 30, they're quite volatile. So it likes to go up a little bit and just wick you out before it goes. So like, yes, you do, something like that, for example. So at the same time, like, it's different at each time. Sometimes it doesn't come to wicket. How do you approach it? Like, do you just approach it based on the PA is giving you at the time, or do you have like a set, just keep the stops below the zone? Like, I don't know how to ask the question, but it's just something.
I know what you're trying to say. So first example right here is if I would have entered off of this candlestick, right, my stop loss is going to go below the zone, 110%, just simply because I don't have enough previous data of more rejections for me to be like, okay, I could put a stop here, I could put a stop here. It's just going to go under the zone. Same target, same stop loss placement, right? Aggressive entry, 3.8 risk to reward. Conservative entry, 1.5 risk to reward. Now, let's say we take a trade over here. In this situation, off of this rejection, since price did reject off of these lows here and didn't get any lower than that, if I were to take a position there, right, aggressive entry, my stops would probably be around this area right here. Let me kind of just shift this over. My stops would be around this area right here after this candlestick closes, a little bit under the low here, because we have now more data to make a better decision. Like, hey, maybe a stop loss down here is a little bit unnecessary versus, you know what, I could put a stop about right here, right? Versus, you look at the conservative entry and it's practically the same thing, right? A 1.5 risk to reward versus I'm getting 3.8 over here. It's the same stop loss size. Well, same stop loss area, not size.
All right, thank you.
Yeah.
Yeah, I have a question.
Yeah.
So what's like the best session to trade gold? Because I'm personally a scalper trader and I trade in a Tokyo session. So that's
Yeah.
like
When it comes to gold, you could trade it either in the London or the New York session.
oh, okay, thank you.
Yeah.
I have a question, bro.
What's good, bro?
I got a question for you.
Yeah.
Your SMA is at 21 right now on gold in the 4 hour. Mine's at 9. How do I set that?
Just go to your SMA.
Okay.
Go to settings, whatever your SMA you have enabled is, go into inputs, SMA, I'm using the first one here, just change it to 21 and then close.
The length to 21 and close.
Yeah,
okay.
yeah.
And then okay. And then what about the MA? Do I change that? Or I don't see that on there. Okay. Okay, perfect. Yeah. And then the length is 5 on the bottom.
No, the length should be 21.
Okay.
Yeah.
Both of them. Okay, gotcha.
I also have a question about SMA.
Yeah.
So do you use the 21 for indices and Forex?
Yeah, I like to use the 21 SMA just as like a reference point where I don't feel as if I really know where price is going to pull back to or give me a good area to pull back to. It's kind of like an area where we could potentially look for a bounce on the daily time frame. Like we have a bounce here, bounce here, bounce here, price broke above here, bounced off of here again. No, it's just kind of like a reference point for me.
Gotcha. So you only look at it like on the daily time frame, like all the other time frame, you don't really pay attention to the SMA?
I don't find myself paying attention to the SMA on the lower time frames. No, not too much. Mm-mm.
Okay, so the daily respectfully. Okay.
Yeah.
Bro.
Yeah, what's good, bro?
Let's just say, price makes a higher high and start to research, right? Trying to get back and come back to the zone. Want to hit the zone, wait for rejection candle, or you wait for a higher low, lower time frame.
My bad, bro. I'm having a little bit of trouble understanding you because of your mic.
Oh, okay. Oh, someone asked a question. Let me turn you back.
Oh, okay. Ray, bro, I know you've been trying to get a question out for the last few minutes.
Yeah. Since I'm new to DTI, I was wondering just like on like do you have like a personal calls like with some of the groups, or this is a time where I take to ask some of the questions that I have for you, or you go have questions and we answer it?
I mean, you can ask like questions in general, but if you have like more personal questions, bro, just feel free to send me a DM directly on Discord.
Oh, okay. Yeah.
Yeah. It's up to you, bro.
Yeah, thank you. Appreciate it.
Yeah, no problem.
Bro, I was a little late. What you think about gold?
What?
I said I was a little late. What you thinking on gold?
Wait for a pullback into 1660, then look to buy.
All right, thanks, bro.
Hey, Raul.
Yeah.
I have a question. When you're looking for a higher time frame bias and a lower time frame entry, do you look for the direction of the trend, or do you look for whether the last few candles is bullish or bearish, or do you just look for the trend of the most recent swing?
I look at structure and the trend on the 4-hour, daily, and weekly time frame, and look to see if there's any possible reversals or continuations, and then I look to get in onto the trend based off of supply and demand levels. Like to give you an example, like here on the S&P 500, right, we've seen price give us a high, higher low, higher high, higher low, higher high, which we can then go down to a 4-hour time frame and see the market structure a lot more clearer, right? High, higher low, higher high, higher low, higher high, we have a high, higher low, double top, break of structure, lower low. So now we've changed in trend. So now that we've changed in trend and we've made a lower low, I'm going to wait for price to pull back to an area of supply or demand, and in this situation, resistance, where I could then look to continue to short and take advantage of this potential bearish condition.
Okay, thank you.
Raul, do you still think to yourself like this is a medium probability setup versus this is a high probability setup, or are you just taking high probability setups now?
I'm just taking high probability setups now.
Okay.
Hey, Raul.
Yeah.
Can you go to AU?
Yeah.
Based on the market conditions right now, if you look to the weekly, can you consider 0.64 as a buying opportunity?
0.64 flat?
Yeah.
Talking about this?
Yeah, if you could look at daily in the 4.
Yeah, you could. You could. I'll just be cautious. This has been very, very. I personally never placed a position on GU in my life, so whatever I say, take with like a little bit of like your own judgment, which you should always use your own judgment compared to mine, by the way. But in this situation here, what we have essentially is price break back above support. If price can maintain above, you could definitely look for buys back up into the highs for sure.
Okay, thank you.
Yeah. All right, guys, I'm probably gonna answer like 1 or 2 more questions, and I got to go to the emergency room.
We get better, man.
Thank you, bro.
Yo,
what's good, bro?
You hear me?
Yeah, but I can hear you now, Cardo.
What about the S&P 500?
The S&P 500?
Yeah.
Okay.
Quick question. You see how it breaks? I'm gonna break that support and came back to retest, right?
Yeah.
Like when you stay around for like a 15 minutes, 30 minutes and wait for a lower high, or would you enter right after the candle close?
I would enter right after the rejection. I mean, you could have easily taken advantage of this S&P 500 level multiple times, selling it here, selling it here, selling it here. Just give you random examples. I don't know the times, but that's how you could have taken advantage of this area. Because as long as, again, price maintains under this area, sells are still very, very valid.
Okay, so you wouldn't wait for a lower high with the structure. You just enter after the candle close. Under the direction?
Well, a lower high is a structure point versus a candle closure is a signal.
Pardon?
A lower high is a structure point versus a candle closure is a signal.
Oh, okay.
Yeah.
Yo, Raul.
What's good, bro?
If you're like, let's say you understand the market structure for that day, would you ever mark zones on the 5-minute time frame and like take trades off the 5-minute time frame zones, or you don't do that?
I mean, to be honest, I wouldn't mark zones off of the 5-minute time frame. Like, let's say the market opens in 5 minutes. The way I would look at it is the same exact way on my higher time frames, from the daily to the 4-hour to the hour, to determine my directional bias. Then I'd go down to like a 15-minute time frame, identify, okay, this is the area I want to go short on because we're short on daily, the 4-hour, and possibly even the weekly. I haven't checked the weekly, but possibly even the weekly. This is the area I would like to go short at. If I see my rejection that looks something like this, I'll sell it from this point to this point. If this point breaks, I'll hold it from this point to this point. Very simple, nothing overcomplicated, crazy. It just comes down to probabilities at the end of the day.
Okay, bro.
Yeah. Well, all right, guys, that's going to be it for me tonight. I got to go over to the ER, visit my family member. Apologize for the short webinar, but I hope you guys did benefit off of this webinar, and I will talk to everybody on the next one.
Thank you so much.
Thank you so much.
Thank you, bro. Hope you get better.
No problem. Take care, everybody.
Thank you.
Peace out, guys.